I've started it again. Are you guys able to see the video? Now, is it connected? Sound? Discord goes bad. Everything is like stupid here. Voice, video. Yeah, Discord is fine now. AKS, can you see if you can, Michael, anybody over there? So my audio is on YouTube, right? Correct? That's good. That's fine. That's fine. Live should be back. Can hear not on YouTube. Why, guys? Why on not on? I've seen the setting over here. Setting is all good. Audio, microphone is good. Desktop audio is good. That's not going to be fun if I cannot do this on. If you guys cannot hear me on YouTube, it's not going to be fun, guys. This is going to be bad. This is going to be bad if you guys cannot hear me on YouTube. And I am not going to be able to. Anybody else is talking? I don't know. Yeah. But it was working. I mean, it worked in the morning, right? You guys could hear me in the morning or no? Yes. So Mark, you are able to hear me good on Discord or YouTube? Turn off the Discord and see if you guys can hear me on. Okay, so Mark says it's all good, guys. Guys, check your things. Okay, Sony can hear me now. Okay, all right. Let's get it going, guys. Let's get it going. It's one of those things. I was there for a while. So consider this as the final start here, guys. And you can see the screen, right? This is the screen that we're going to talk about. And this is what we're going to be. Oops. Nope. There we go. Okay. All right. So a lot of you guys have asked me these questions about going short on intraday, and some of you guys get stuck in a trade. All right. So shorts are likely to get stuck in a trade that is against them, right? Which is parabolic. So it talks about going on short on the intraday. What are the short killers on an intraday trading, and what are the shorts happy mix on an intraday, right? So let me go ahead and get this on going as well, so I can write it for you guys over here. Annotation. Oops. Okay. Oops. Don't want to do that yet. Okay. Oh, come on, dude. There we go. Okay. All right. So, what are the shorts killer on an intraday trading? What are shorts happy mix on an intraday? So we're gonna go on a slide number 2 over here. And this talks about things to look for when shorts are in a things to look for when shorting a stock on an intraday trading, right? And next thing, these are the key things. Shorts killer on intraday trading are getting stuck in an upside halt, stock moving up and up and up only. I'm going to give you guys lots of examples. and how to avoid them. There is no 100% proof of how to avoid it, but you can be as careful as possible, and you can succeed up to 80% on those killer moves that's against you. So we're going to talk about that. So stock is moving up and up only. Pullback is not substantial where you don't take the profit. That's a killer. Parabolic move upside in the pre and post market where there is no halt limit and there's no stoppage at all. Getting a lower entry is a killer on a short, right? A lot of you guys, and you guys can hear me, right? Let me hear it one more time on your Discord that you guys can hear me, and it's all good. So let me know over there so I can continue. So when you're stuck on a parabolic move, what should you do? The first thing is to bail out right away, guys. To bail out, when you're bail out, bail out should be your only goal when you're stuck in a parabolic. I'm going to show you an example. This happened today. You guys, while I was working, a trade called Xena came in. Zebra, Echo, Nancy, Alpha. It came in this afternoon, December 19th. I went in, the first thing it did was popped up above. I got in at 1060. You guys can see this right here, 1060. And immediately popped up, popped down. So first thing I did was I bailed out. Okay, that's the first thing I did. I'm not sure if you guys can see this. This is a bailout right away. I got an entry, bailout right there. And then I reassessed it right there, guys, for a proper entry right there. Whoops. Proper entry was right there. And then the covers obviously happened right there. Okay? So basically, bailed out. That's your only target should be to bail out. When you're stuck, sometimes you're going to take a loss. So this is not, I'm going to show you the next slide where you're going to take a loss and you're going to get bail out. And today happened like 3 or 4 times. There are going to be plenty of examples. This is going to be a long, about 40, 35 minute long webinar. So a lot of areas we're going to cover it. So brace yourself. First thing first, you get an entry, you bail out. You know, you don't look for these areas just yet. You see a rejection, okay? And you see a rejection, you get back in, you make your money. So we're going to go on slide number 2. We're going to go ahead and erase all this. Okay. So again, you're stuck in a trade. Bailout should be your only goal. Avoid greed, profit, and emotions. Avoid greed. Like, no, I'm going to make money from here. Avoid it. Seriously, avoid it. Profit. I'm thinking profit. No, it's going to fall. I'm going to take profit. I'm going to take huge profit from here. Some of you guys who joined in a couple days ago, they still have, that face like we were talking in a fun intended, that we're going to sit on it and we're going to say, hey, we have a poker face. Are you going to fall or are you not going to fall? Stock doesn't work like that. So, your bailout should be only goal, avoid greed, profit, and emotions. Emotions going to happen because you'll be like, Jesus, I'm down like $700 or $800 or $1,000 or $7,000 or $10,000 or $100,000 in somebody's cases. Okay? So again, get in a parabolic entry, bailout should be your only goal. See a rejection, get back in for the second try. Wait for your payout or your stop outs again. Wait for your payouts or stop outs. Okay? So this was PRFX this morning. Again, very similar to what happened with Xena. Look at that. That is a short entry. That is a short entry right here, guys. What is this right here? Stop loss. How much is the stop loss? So we enter at 755. Where is the stop loss? 840. Okay, now keep this over here in mind and what the market conditions are. Again, this is about stop outs and parabolics and things like that. This is not about going long, but I'm just going to cover that area which says how to go long. Okay, so again, entry, it goes against us, shoots it all the way to, look at this is 10, we are stuck. First thing you do, you take a loss, bail out. Then you go long right here. Again, recover your profit right here. From here to here, the distance was about 50 cents. But once you enter right at 890, you're looking at 11s. It's already profit at this point. Again, I went long again for the second time. This is PRFX this morning itself, okay? This is not what I'm supposed to be discussing, like how good I was, and then I obviously took profit. Then now, once it's established a range, because it dropped from here to here, all the way. It dropped all the way from here to $10, $17 to $10. So it pikes up. Now you have a level established right there. You take a short entry, make money. Take a short entry. We thought it was going to fall more. It didn't. Came back, added a little bit more. But then again, it was time to make some money for about 10%. Pretty nice size, and that's how it was done. This PRFX. Everybody's pretty clear? Everybody's pretty clear, right? And I will take your questions on Discord itself in a little bit. Okay, so now we're going to move up to the next chart. So one of the things to avoid when you're parabolic is to hold yourself back.
Hey, Raj.
Yeah, Rahul. What's up, buddy?
Hey, Raj.
Yes, Rahul. I can hear you.
Okay, so yeah, I have a doubt on this level when you re-enter that.
Okay, I'll go back and I will explain it to you again. Let me go back to that slide.
Yeah,
Okay.
when you re-enter that, you draw the line, right? Can you explain the level?
Yeah. I'll show you next slides, all the levels and everything. This is, a screenshot, so I will show you the levels as well on a daily where the levels are, blah, blah, blah. But this was a rejection. This was more than anything else. That's a rejection. So we had sold it. We thought it might even go 20, but we take profit, right? Correct? So we take profit. If you are in at 13 and your stock is at 16, you better take profit. That's substantial, 25% within our system. We take profit at 10 to 12%. This is 25, 30%. We took profit from here to here, which is 30%. Then we took another profit from here to there, 30%. Now we waited for it to drop. No chasing short right here. Why? Because we don't know. 16 is not a level. I think the levels were already broken beyond when it walked up to whatever in the morning, like 244 or something. So there were no levels at this 16 or whatnot. It's just that it was following yesterday. There was a stock called NUKK. This pattern was very similar. These buyers were very similar. That's why I said engage yourself in a stock to be a really good trader. I think this is a good one here, chat. Okay, chat is not connected for some reason. But so what you do is like you engage yourself, you watch this thing from yesterday. This is a different stock. Nuke is a different stock. But is market trend different? Answer is no. Market yesterday was doing 1,000%. Market today was doing 900% as well. Small caps. We are in small cap, okay? Rest of the market was down yesterday, 800 points, and today the market was down another 400, 500 points. So, and then obviously blended it up to like whatever. It finished flat. Actually, NASDAQ in negative and Dow Jones 19 points up. So it ended up flat. But are you clear? This is not an entry. That's just a cover. Okay? But when it fell all the way from there to here, which is below 11, now you have a range here and a rejection. So that's what you take as a short. Of course, you're taking a gamble. A gamble is every time you take an entry, it's a gamble. That's when I took the entry. And then again, it was a pretty substantial 20%. Walked up. At this point, we saw this cluster right here. And it kind of behaved. The rest of the day, it was right around 13. Okay, 1350. The rest of the day was 1350. In fact, you could literally hit 1350 or 1280, something like that, rest of the time. You guys are clear, right? Rahul, you can type in the thing. Sony, you're still saying no audio. Everybody else can hear it. Somebody please type in also in the room, chat room, for each other that yes, audio is working, and you're the only one with where the audio is not working. Let her know, please. So where are we now? Okay. So charts to avoid. Okay, this is a chart. This is good. From this point to this point. This is good. And I'll tell you, I've spoken about in our strategy parameters what to avoid, what not to avoid. Have you guys heard this thing called, if we started trading and this stock is here and you are only looking at this portion, you know what that is? That is pretty steep. Let me do this for you. This is somewhere 45%. This is 90%. This is 45. This is somewhere around 65 degree angle, okay? Oops. Where is the eraser? Okay. Whoa. Wait. Okay. So from here, this is where I get stuck. Now this won't work, whatever. This, and this is your 45 degree right here. This is more like 50. This is more like 70. This is more like 80. This is your 90. When you have an eye level, a stock going up like that, two things you want to do. Again, this goes back to the question where we started the slide. Okay, how to avoid. Remember that, guys. This is all going to tie up into that. How to avoid. If the stock is going up 45 degree angle and higher, you're no good to trade that as a short. You're going to get killed. So here's what happened. Okay, win one, then we lost right here. This was also at that point 45 degree or 70 degree or whatever. This was sideways all the way right here. If you guys see the screen, and then a stop loss happened. This was sideways, then the stop losses started happening right here. But we did what? This blue line is a long line. This is actually HXT specialty. So we won 1, 2, 3, 4. We lost 1, 2, 3, 4. So 4 and 4. This was a very difficult. This is very rare. If you go in our strategy, we talk about how we're going to have about 4 very easy plays, 2 medium difficulty, 1 with a real difficulty. This was one of the one with the real difficulty. So we were giving every bit we're making and some more because stops were on full sizes. You know, Rahul, you were stuck in that one. AKS was stuck in. In fact, the entire room was stuck in. But then we did long right at 497. Okay? And I didn't cut it. I let it ride. There was a small rejection right here. Normally I like to take profit right around 840. But this one, I was like, I'm not going to take profit till 930. And you can see this is line for 10. And I didn't take profit till 930 or whatever that area is, 10. That's where I took the profit. Okay? And then, look, now it's a rejection. So based on that rejection and probably a previous level of 10, went short. Won it one time, went short. Got beat again. Okay? Took another chance because it was a rejection, thinking that, okay, fine, this is a rejection, had done a really big rejection right here. Went short again, got beat again. Last clear was this. And then from here on, you're going to see win number 1, 2, 3, 4, and 5. So win from here to here, here to here, here to here, here to here. In fact, this was even more. Then a big size right here, and then boom, 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 boom. Okay, that was 5 win on a trot and saved the day after 1 o'clock. But how difficult is that? So again, going back to the eye line, if you're trading and this is at 65 degree, you want to avoid a trade that is over 45 degree at this point. Okay, as a short, it ties up into your persona of what to avoid and how to recognize a parabolic. 45 degree and above, you're in a parabolic. I'm going to come back to the one that goes straight up, right? That's the main key that you guys are looking for. And that's fine. So everybody's pretty clear on this one, guys? Everybody's pretty clear? Let me see the... That's day 1, correct. That is day 1. That is correct. All right, so everybody's pretty clear. So let's go into the slide, next slide. Same thing happens, guys. Same thing. Take a stop loss. Take a stop loss. Don't be greedy. I can use choice words, but this is a webinar, so I'm going to chill, okay? Take a freaking stop loss. Look, pretty heavy size right there. Freaking that's a stop loss. This is LIFW from December 6th, okay? Freaking take a stop loss right there. We have the ability to go freaking long. We have the ability to go freaking long. Ira, that should tell you don't do long and you're not by the computer, right? And you're like, working with people's teeth and, you're obviously running a clinic and you're busy and you can't do that. The trading is something like this. You got to do up and down. It's not as easy as intraday is not as easy where you think you can just sleep over it and take a cup of tea, and especially small caps and parabolic we're talking about. That's where the most volatility is. If you have the highest amount of volatility, that's where the highest amount of profit is going to be there as well. So anyway, freaking take a stop loss, and be good with it. So let's take example from there. So where was my entry? Right here, 255. We said freaking we're going to stop out at 280. Freaking stop out at 280. Doesn't matter your size. Doesn't matter. You put the house on it. Take a freaking stop loss. You can take that money again and you can take another one, a good place. So in this case, we went long. Again, why? Look at this. It was a breakout volume in the morning. It was set. And look at this. Right around here. Right around here. If you're fighting a short without a level, it's going to happen to you. Now, when it calmed down here, guys, we started going short right here. This was an added position. Then it's all good. Went back to 255. Entry was $3.06. I believe that was my average. And first cut was, I think it was even a little bit better. Anyway, so clear annotation here. We're going to go on the next slide. Again, I'm going to talk about level in a little bit. Again, this is a straight up, right? This is a straight up. It's 10:30 or whatever when market starts, right around 9:50, 10, whatever, 10:30. Goes up straight. But this is a desired level at 440. If you didn't take the chance and you thought, whoa, this is going in, and when are we going to do this? Well, 440, because this is somewhere around here. It's going, it's fading. You don't want to take the entry over here because it's not up enough. All of a sudden, it's in your area. Now, how far are we going to play? So this one, we had decided that we're going to play even if it gets to 480. So you enter 450 and you enter 580 and 580. Sorry, 480, my bad, 480. and the stock goes to 5, rejects. Obviously, you have added your size. You'll see first thing what we do is cut our size, right? It's in profit, just basically 2% in profit, but cut your size. Cut your size. That's how to deal with the parabolic, because we don't know if this is going to shoot up again. Okay, one thing was in our favor was this sell candle. Sell candle was bigger. Now, then don't take profit here. Don't take at even 4 or 5. I waited for straight out. You guys can see 14, 15% of my half size. Why bother with this area? Because you recognize this sell candle. These are the keys. Again, Ira, do you have enough time to see these things? That's up to you. But if you're a trader, you must be watching this. You can't be just watching this. And you can't be saying, just because this needs to come into your area. This is our type of stock. Parabolic means, the stock is up 15, 20%. You're looking for as much parabolic, 60%, 80%, 90% in like 5 minutes or less. It's not our type of stock if the stock doesn't go within 5 minutes, 15 to 20%. Go back in our strategy parameters. It's explained to the detail. That's not you. That's not us. Everybody's pretty clear? So we're going to go to the next slide. So these are the easy ones. Okay? These are the easy ones right here. I'm just giving you example. These are very recent, by the way. This is from Friday. This is WKY. Now this is, Rahul, what you're talking about. It's set up a range of 640. Anytime it comes to 640, freaking hit it. 622 first entry, 660 second entry, 680, 690 is the stop. Look what happens after that. Look what happens after this. You just sell, sell, sell. You finally close your thing when it's moving, whatever. So again, you guys remember this? This is the crazy one. Okay. Watch this type of, especially this area. Watch that. That's a buy, halt in a wick. Just wicks, 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 wicks. Okay? So we went long immediately over here somewhere. There was a reason for something news or whatnot. We were long on it, and finally when we decided to short a 170 area, this beat us. Okay? Let it go. Let it go. Okay? We decided that this is still doing this. This was just one off. We went long again. You can see where we took the profit. Okay? Long here. Sorry, this one is short right here. This one is short. At this point, I don't remember exactly what we did over here, but this one is short. This is long right here. This is short, paid here, short, paid here. It was on the way down, I believe. And sell candles started to form. That was one of the reasons why we went short. Okay? Another example. This is AMPG. Okay? This is AMPG. Again, I'm going to come back to that topic. I'm just showing you examples after examples so you can understand what's going on here. So we go in our area. We say we're going to short it at 140. We short it here. We make profit. We take it. We add more. And we take a stop loss right there. Okay? We take a stop loss. Again, we short it right here. We get lucky with the rejection. That's another area which is $2 plus. Make profit. We kind of cut size here, whatever, little over, and short again. I think this was by accident. I cut the entire size. But when it piked up, got right back in profit. From here on, it's a short, short, short. Guys, this is the key right here. This is what you've been searching for. Parabolic. Breaking out of your area. Look at that. 240 is our number. This is 240. 240 is our number. And I keep telling you guys what are our numbers. 2, 25 to 240 is our number. 340 is our number. 440 is our number. 5 is there about. 540 is not our number. 640 is number. 760 is our number. 840 is our number. 10 is our number. 970 is a rejection at 10. You guys should know this because it's accumulated from over the years where we have done a lot of work. We know where they're going to take rejections within that area. Now, can you get it right by the pennies? Answer is no. It's those areas. It works 8 out of 10 times. And if it doesn't, this is what you do. IRA, this is parabolic. You get in your area 240. You freaking take a stop loss. All right? Now, after you take a stop loss, this is the best area. It drops. It drops, guys. Let me clear this up so you guys can see this. From here to here, it drops. Where did it drop? From here all the way to $1.90. Now walks up to our 240 area. This is the great short now at this point. Now, anytime it comes in this area, it's a short. We try to go a little bit long, whatever, in this area, didn't do anything. Okay? This was nothing, but this was good. This was short, bailed out area, basically was a loss. A small loss, very small loss. I don't know what reason it actually, that I wanted to go long, maybe news, maybe volume, I don't know what it was. But this is from 11th. Let me know if anybody has any question right now. Again, I'll tell you guys, if it breaks out from your area, starts going parabolic, what you got to do? You got to take a stop loss. You got to basically take a stop loss. This was a rare one. I'll tell you, this was a rare one. They had an offering at that point. Okay, this was an offering. We chased it, we got it, and this one held. So it's like, okay, whatever. But this is where we went big, big, big. Right around 270, we heard the news. Lace is offering. It's offering $2. We take a huge, huge profit. 270 to 220. We're pretty much done. Whatever shares were, we sold it there. Whatever, right? Okay. Some of the important charts are coming up. Yeah, go ahead, buddy.
Hey, Pete here. Hey, that 245, that was the high on the daily when you look back?
Correct. Not only daily, Pete, you haven't been with us long enough, and I'm glad you're here and you're really enjoying the room. We have some key annotations made up by us ourselves, made feel good numbers. Okay, that makes us feel good in the room for last 2 years or 3 years, and I'll tell you, 130 on a dollar stock, we love to go in short, especially if it's coming from 80 cents. Or 60 cents. 130 area, 127 to 134 is our entry. 148 is the stop. 178 is our stop. 168 average is pretty good. 156. So these are numbers that we know from accumulation of thousands and thousands of trades. Okay? So when we have these numbers and we have kind of gotten in our head that stock, when it's coming from $1.20, $1.30, $1.60, they take profit at 240.
Great. Good to know. Thanks.
You watch them, and you're going to learn this with us over and over and over. Where is the stop on 240? 265. Okay? 265 is the stop. So those numbers are going to come. You're going to learn about them sooner or later. But anyway, when the stocks goes against you, it goes parabolic. One thing again, go back to the very first slide. Greed is going to get you. Looking for profit is going to get you. You're going to give some losses. That's not going to get you. Okay? So, for example, if you went into a stock and your stop loss was 45 cents in pre-market, the minute the stock goes 55, you freaking get out. Don't think that I'm going to get 45. Come back, calm down. Take a breather, take a cup of coffee, take some water, take juice, whatever floats your boat. take that freaking stop loss. So what you just did, then don't just rush to enter it, because you have plenty ways to make money. If you stay calm, you're gonna make money. All right. So I'm gonna come back to the pre-market as well. Hold on one second. Where am I? Look at this. This one, I some reason went long. It fell to 870 from 930. 870 right here. You guys can see this. It's 860 actually. And entry is 940 and below. You can see this 942 right there. So 930 is entry. It could be even worse, right? Do I want to get out here? Yeah, I do. Freaking take a loss. And didn't touch it all freaking day. Look at this. What is this stock? This is QBTS. When was this? This was on Tuesday, December 17th, this week. Take a freaking loss, man. Take a loss. That's what you guys cry about. Most people cry about it. Beginners cry about it more. Our room is happy because almost 95% of you guys make money every single day. And I'm seriously happy that you guys are a small group, very connected and very active. And we do good because we support each other with a lot of things. Okay, so opposite. Again, if you go back, okay, shorts killer on intraday, getting stuck in an upside halt, right? Getting stuck in an upside halt. And I'm going to talk about how to recognize the halt as well. So, stock moving up and up only. You got to give it up. You can only to a certain extent make your sizes and cut your sizes, make your sizes, cut your sizes. Again, if it's over 45-degree angle, you got to give it up. If it's 45 degree, it's basically zero, it's what you say. 45 degree, 55, 60, give it up. Give it up. Make your average after a few times. There's losses after, some time, give it up. Pullback is not happening. I get frustrated. You guys hear me all the time. I'm done with this stock. What was this yesterday? VRAR, 245. It paid us one time, 437, 237 to 207. Paid us 30 cents on a 24 cents, 10%, whatever. But it gave us more. It gave us more. Then the next time we cut our average to 245. We're supposed to add 260, 268, stop at 278. 278 never happened. 3 hours span, it just sat there, 2.5 hours. I said, give it up. It was just not enough pullback at that point. And that's also okay. Some of you guys, that's when you guys are good. Like say, Wes was good and he held on and the stock went to $2. It did, from 248 to $2, from 260. But if you walk away, it's also okay because we're looking for very active type of stocks, right? Parabolic move upside in pre and post market, that is another beast. Set your losses, play smaller sizes, okay? Getting a lower entry, how do you deal with that? We've spoken live, but I'm going to recap that. Getting on a lower entry, either wait for your profit if you have a smaller size, but if you have a bigger size, go ahead and start taking profit where the levels are. If the level is decided, 114 is the level, 113 is the level where it's going to reject, 107 is going to reject. 3 cents, 4 cents above, start cutting your sizes. Don't wait for 88 cents. And how many times have we taken a profit at 107, 103, 111, and stock has gone to 88 cents, 60 cents, 50 cents, 38 cents. You're going to say, what about that? What about it? What about it? You take your profit 10%, that's your system. Are you here to take 40% profit and 40% loss? That's another system. 10% losses, 10% profit. And then remaining, when we get 25 and 30 and 40 is small sizes. When we cut it, our accumulation is only 14%, 15%. And we can do that 8 times and lose only 2 times. That's what we do all day long for the last 3 years now. So let's, oops, that is not good. I keep forgetting this. Like I said, this topic is very interesting. So what do shorts love on an intraday trading? Okay. You guys love, everybody loves this, right? These are the love ones. These are the easy. Give some loves over here. Getting stuck in a downside hop. Stock moving down and up in a lower range. Pullback is substantial where we're giving a profit up and down. Parabolic move downside, which is basically without the halt in pre-market. Getting the best entry possible. That's what we love, right? Practice on these things. It's going to be another topic, another debate, how to do these things. But for now, that's what you want to practice as a best practice. Now, I'm going to show you some examples over there as well. Again, we know 440 is our number right here. I keep harping about it, 440. This stock is 440. Right here, we start building position at 430. We add up, we know where we're going to stop. If anybody has been with me for, I mean, most of you have been for more than 2 years now, a year and a half. Our stop on a 440 entry is 480 is our stop loss. You guys know that. Load it up. This is great, right? You wait for your areas. Is this an area? Is this enough? Is this high enough? It didn't qualify, okay? It didn't qualify. So this part didn't qualify, okay? But when it got here, this was our entry. This was, when was this, guys? 12:18 yesterday, CTNT. Get the top-notch entry right there. Have a good size. Take your profit where it belongs. Where do we take profit, guys? You guys know this. Okay, where do we take profit? 390. Look at that. Look at that number. 390 and below. Where's the next profit? 365. I tell you guys these numbers. 365, 390, 440 entry, 480 stop, add 450, add 460, get your average to 450, 455. Even if we lose, we're going to tackle it again. So, easy, right there. Easy, 12%. And then you add some more. So accumulation, and then add some more right there at 340, and you are at 440. So accumulation is not like 28%. It's not. Our accumulation is roughly about 17%. And we are happy with 17% on one time, just in and out. Okay? We're extremely happy. Okay, we're going to go the next slide. Again, same thing, guys. Same thing. We identified this as a level. We identified this as a level. Now, don't get scared over here. Look at what's happening over here. There's a rejection. That's mostly sell. These are small candles. These are pumpers. Recognize what are pumpers? That's a pump. Look at this. This is 400K. Anybody can pump. Chad guy can pump. So and so can pump. So and so can pump. That's a pump. Recognize a pump versus the hedge funds and the big people. Okay? So recognize this right here. Entry at this level. One and done. Remaining over here. This is 24% right here. It says 24%. We entered 370, 380. This is from yesterday as well. No, from 13th. Okay, Friday, last Friday. And we take profit, but our accumulation out of 24 is somewhere around 16%. Okay, because majority we took it here, 310, and the last one was at 274 or 260, whatever. Everybody's pretty good?
Hey, Raj, Pete again. Just a quick question. That first that really big parabolic at 950,
Uh-huh.
you took an entry on the top of a green candle. You didn't wait for a red, or you just thought that level was high enough.
It was high enough. The level was there. We discuss it. So every time when we trade, we discuss exactly what level we are going to get in at. And if it's that level, we say we're going to add here, and then we're going to have a room to add a little bit more, and possibly at 420, 430. So this was 380 entry, and 430 was an add. 480, 448, 465 area, manage our average, get to 435 and stop out if it continues to be a parabolic. But we knew this was a pretty solid area. And I mean, I have a lot of videos I can show you guys. Most of the time when we identify, we're pretty darn good with our levels, where they are. Okay, and I'm going to show you, there's some slides over here from today talking about the levels.
That's great, because it looks like it was about 70% up. Yeah,
Correct.
that makes sense.
Correct, sir. Correct.
Okay.
Yep. This is another one we love, guys. What do we love? This is about love, right? This is about what we're talking about, Pete, is identifying a level. Okay? So we identified a level. It goes boom, profit, boom, profits, boom, profits. Look at the entries are freaking same. 345. Right around 350. 345, 350. 1, 2, 3. In, out, out, out. Okay? We identify this level right there. It was pre-existing level that we saw on NMHI. And it did wonders. And if it wasn't from pre, we did it one time, we did it 2 times, we did it 3 times. All these covers, if you're taking it right in this area, that is, what is this area? $3.03, $3.50 is the entry. So is that about 14%? The answer is 14% is what we thrive for. That's 3 times 14%, and then some more. And then some more. Okay? Move to the next slide. These are just examples from very, very recent. Again, very similarly, identify a rejection, then after that a level right there. Oops, what did I do here? Identify this area, rejection. We're supposed to get this area itself, 330, but it never made it that far. And then 10% and then more. But these are just examples. I can go on and on and on. I'm going to do one more probably. Okay. And then this one is interesting. This one is interesting, guys. Okay. Look at what happened over here. Awesome area, same area. Same area. Okay. Similar profits. This was the first one. Then we had to wait over here and make our sizes. Cut your size in half, but then again come back, make your profits. Again, take this, take that, covers. No plays in this area at all. In fact, no plays in this area. Why there are no plays in that area? It's because it's not parabolic, it's not getting to our range, it's not coming up with the... And again, we can, this is what I wanted to show to you. We can do this. This is 25 to 30 degree angle. And it keeps coming back to 210, 220, 195, previous levels. We take it on a parabolic. Just on the parabolic itself, because it was just doing enough. And look at this. After every buy, there was a sell. So this was post hour, I believe, right there. I was sitting and I was doing something. First thing again, notice this. What is this? 240 entry. Okay, make my average better at 260. Did not go to the stop loss. It was post hour. What did I do first, guys? Cut. Cut my size. This is not a bailout, but it's a cut size. What happens again? Entry. There's probably possibly entry here. Then cut size again. But this is my real profit right here. This is my 10% solid from $3 to $2.64. Okay, and a little bit more. That's my real profit. So you can deal with this. This is, if I was trading from here, this is still about 45 and above, about 60 degree here. I'm good enough to do this, but again, if it kept going up and you kept cutting size, how long will you do it? You gotta stay. At this point, if it was here, I would freaking take a stop loss. 345, 365 from 285, made my average to 315, 330, 335. I'm freaking stopping out at 365. I am. Even if it's a full size, I am stopping out. So it's not about not losing. It's not about, people say, you cannot win everything. In the stock market, you cannot predict everything anyway. So if you keep doing this, I made my average just to get my best profit here. Okay? This is not a profit. Even this might have been a profit right here, but this was definitely a profit. These two were size cuts. This probably was a size cut, but this is a serious profit. You can do this to a certain point. When not to do forever is the key. 2-3 times and the stock keeps going. Stock going like this, you're still okay. Stock keeps going like this, you are even better. Stock goes sideways, now you know a range. Okay? Stock goes like this, you cannot do this. You cannot. Avoid it. Tell your mind, avoid it. I'm not going to short it. Leave it. Leave it alone. Okay, this was easy. Again, entry 130, profit straight out. These are the easy ones right here. I got my profit. Look at this. It kept falling to 65. This is what I was talking about it. So what? It freaking 130 and you're covering at 110, 114, 134. You made 20 cents, 20 cents. You needed 13 cents to be 10%. You just made yourself 15% on your account size. Get your account size right. Get your equity size right. Don't play number of shares. Play percent of your account size. Make that, not this. Not this 48% or 60%. This was probably what? 50%, right? 48%. Yeah, 60, 130, 134. So yeah, it's about 48%. 50% drop. This will happen once in a while. This will happen all day long. This is what we do. This is what Hammer X Trader does. And our tracker will tell you we're the best at it. We have done this, guys, okay? Find out a webinar I did about how to find a rejection. And it's a lot more detailed than this, okay? And look for that webinar, PowerPoint presentation that I did, how to spot a rejection. So when do the rejections happen? I'm going to go over them because it is part of shorting skills, okay? Supply zone, demand zone, support level, resistance, round numbers. Round numbers is what we say. Our round numbers are 240, 130, 345, 440. Once the stock goes to 8, 9, 10 and comes back under 540, and especially breaks 440, you can guarantee almost 8 out of 10 times it's going to keep nosediving, especially if it's a $2 stock. You're going to get another dollar out of that one. Okay? So another one, you guys know the 60% drop, which is what we call is a perennial fader, or ultimate fader. If the stock has gone up a certain amount and dropped 60% or more from the bottom where we actually thought the move happened, if it has dropped 60%, any pike is a short again and again and again. Okay, so coming back to this, So spot the rejections in these areas where supply zone is a strong. Supply could be a buy or sell. Okay? Demand could be of buy and sell. Support level needs to be very strong as well. It needs to touch 5 times to be a gold level, 7 times platinum level, 3 times silver level. 7 times is just way too good, okay? Round numbers. Remember your round numbers that we talk about. And I think it works for us. You can create your own round numbers based on your experience as well. 5 is a round number as well, by the way. Just okay. Understanding what are short killers on an intraday level. In a supply zone, there's an axis of buyers. Recognize the example that I gave you. I've been telling you guys day in and day out. There's a 200K, 300K buyer. It's a pumper. 1.2 million, 3 million, 4 million, 2.3 is the big boys. 1 million is hedge funds on. 3, 4, 5 of those hedge funds are on. Okay? They get into that. They can take it. They will take one level. That's called A, B, and C pattern. And I'm going to talk about that also to recognize patterns in your parabolics. Okay? Recognize the pattern. It's going to come in a little bit. But it goes up. You know, step 1, dips little, just halfway. So I'm going to explain it to you. Hold on. This is the best way to explain. Goes right here, comes right here. Goes right here, comes right here. And this time, here's the volume. You're going to see the volume right here. Okay, what's this? 1 million, 1 million, 1 million, 1 million. Back to 1 million, 1 million, 1 million, 1 million. And then you're going to see 500,000 or less right in this area. At this point, the hedge fund people, this is not the exhaustion, this is the exhaustion. From here, in this area, when they pike up right around here, this is your best. It's called A, B, and C pattern also. Comes handy. I know this by just experience. When this happens, say, hey, they're slowing down. Now, remember this Wes, I said, I don't know if he's around, but Wes, I said, there's going to be big boys now. They have taken it here. They've taken it here. Now, retailers, so-and-so want to get here. They'll tap on your head. Sit down. Sit down. Sit down. Sit down. And then eventually, even those people start coming. This million people will drop it from here. Bang, bang, bang. Like that. Okay? There might be a little push here. This is called pipe. Bang. Little push from here. Bang, pipe. Now these people are just taking profit from here. I teach you guys that every single day live. Okay, how to recognize them. Is everybody good? Everybody clear? Type in the chat if you guys are all good. I know I can't take my YouTube is not connected, so my chat on YouTube is not connected for some reason, and I can't see it. So in supply zone, there is an axis of buyers causing the price to move up. This occurs when supply exceeds the demand. Traders are willing to buy at a higher price. Okay? Generally, this applies in a big cap properly, but in a small cap, it's similar if you can recognize the candles, the bottom volume candle. Conversely, in a demand zone, there is an axis of buyers causing the price to rise. People ask, what causes that? IRA is going to ask you all day long, what causes that? Why is it jumping? It's this manipulation, right? Well, no, it's not manipulation. It's pumpers, big buyers, investors, retailer, hedge funds, capital venture. Any of them can cause the stock to move. They're all there to take their monies versus other people's money. Bet against other people with their money. That's what I meant to say. It can be also the news and fundamentals of a company that can cause supply and demand to go up. You know, sell or buy. Either situation. So to put the rest to that conversation, expect that is the stock market. You know, pumpers, big buyers, investors, retailer, hedge funders, capital venturists, any of them can cause the stock to move based in trends, momentum, news, and fundamentals of the company. All good? So again, I'm not going to go too deep into this. Understand support and resistance. I've showed you some charts. It takes a lot of time and practice to understand support and supply. There's many levels, right? How do you spot the buyers? I have shown you guys in our room how to spot a buyer. I can go on a chart and I can show it to you. Might as well do it. Hold on. How to spot a seller. Okay? This is probably not the most fantastic chart. Let's see. Yeah, this is good at this point right here. So 327 is a level. You can see this seller is coming every single time, right? 327 with a drop of, and again, this is a smaller candle. We're not talking about big candles here. We are talking about big candles, which is 2 million. So now these are not hedge funds, these are big people here. Okay, this is 2 million, 2.5 to 3 million per candle, guys. 2.5 to 3 million per candle per minute. Okay, that's your supply and demand zone right now. But at the same time, it shows you what the price drop is. Price drop off is about 4 to 6 cents. When it pikes up, it tells you what the length is going to be. Look at, if you notice this is the same size all over. First candle all over. All three spots. In fact, here as well. That's the guy. And if you measure him, he's going to be same in all those areas. Other things to look out, very cleanly I tell you guys. These are RSIs. Now RSIs, so why not here? Okay, this is good right here. This is good. You could have gotten here and here as well. Okay, you definitely needed to get right here, which we did. We definitely needed to get it right here, which we did. We definitely needed to get it right here, and we did. Look at the RSI. Okay, overbought, time to sell. You bet on it, and you plus it's your areas. Okay, so hopefully that made sense to you guys. There's a lot more than one webinar. If one webinar can teach you everything, this is probably the as elongated webinar you're gonna get. So spotting supply and demand zones. Spotting supply and demand zones on your charts can be helpful trading tools, similar to support and resistance level. These zones highlights, this is what I was talking about. Recognize those candles live on that particular day. Highlights on chart where the price is likely to bounce or reverse, or where the sellers are and the buyers are. Traders use these zones to pinpoint areas where they might buy or sell. In other words, supply and demand zones act as a first filter, helping you identify potential profitable price level of entries or sells. All right, that's what it comes down to. Everything's good. Unfortunately, need to run for appointment and watch the reese. Okay, that's fine. I'm gonna wrap it up too. I think it's getting too long. Difference in supply and demand zone. Go to this. Although the concept of supply and demand is somewhat similar to support and resistance, there are some important differences between two concepts. Whereas support and resistance levels simply exist at a price turning point, supply and demand is again where the buyers and sellers are, and also the momentum on the stock. Again, many traders struggle using support and resistance because the price often reacts quickly at those levels and you don't get your entries. You've got to have faith. You've got to have a faith in a proven system. If you haven't proven a system, you just look at support and resistance and you think you can make money from anywhere and everywhere, you're wrong. Okay? So you have to have a proven system where support and resistance are. A lot of people are going to lose that if they don't get into that. Again, resistance, price turns down. This is what I was talking about. Recognize the seller. Recognize the seller. Recognize the seller. recognize the seller. It's easy afterward, but we do this live every single day. So we are all good to go there. Okay. There was a trade called XBP. While I was preparing this happened. Okay. Rahul, this is the question that you asked me earlier. Daily level versus that. And I've shown you guys in the pre-market. I'm live right now. I show it to you. I show it to you, and you should be pulling up your own chart to understand how to do this, because I tell you guys live on the Discord room. So I read Mark said something about XBP. What a miss, Mark, right? You said that? And I was actually preparing this chart, and I said, like, whatever, I'm going to take a small trade and do this. So I looked at the daily level. Take a look, guys. Is this level is not rejecting. This is the key right here. Okay? These are the key areas. Especially these two. Now, this morning, I saw this, and I saw this tiny level, 164. Okay? Stock actually went as high as 185 or 190, less than 190. But this area right here interested me, and to add and stop out of 193 interested me. Right away, I took this 170, 168 as my first entry, and I took profit right away at 14%. You have to. Next profit was right there for 39%. This happened today, guys. This is from 18th, whatever that time was, a little while ago. We missed it in the morning. 5, I wasn't around. I don't trade 5 o'clock in the morning. But it came right around 2:30. Okay, 2:30. It wasn't near close or whatever. But happened to catch that. I was watching, I was preparing some charts, and I happened to see that. I'm like, okay, let's get in. Didn't go big size or anything. I went like 1,500 shares, not like 10,000 shares or anything. But still, I would have repeated the same thing even with the 10,000 shares. But the level was 167. 167 was the level, okay? Right there, 167 was the level, guys. See this? And I remember this, 167. You can ask me 4 days later, and I'll tell you that's a level, 167. Okay. Oops. I'm going to wrap it up. I think I've answered some questions. I'm not able to take any questions from the YouTube chat room because I don't have access to it right now. Again, you're going to spot the rejections. Look for the zone. Look for the green candle with the tail. Look for the red candle that follows the green candle. Okay? Possibly a complete body and a little bit move up. Okay? Stop loss on the top of the wick tail at the green candle or higher in that zone area. Or simply put 10% stop loss. I literally go with this all day long. Simply put 10% stop loss where you think the profit is 3x from here. So if the stock was, say, $1.04 and the stock went to 121, do you think I'm going to short it? Heck no. That's my simple answer. Okay, when should you play off hours? Should you play the real parabolic, the stocks that you don't know? You can. You should technically go for this. Okay? That. Okay, consider it not a huge positive news or earnings play on those. Okay, something is going against you. Find out what the news is. Find out what the levels are. Work with those and take a stop loss. Again, it's easier said than done, but it is again and again, guys. Volume recognition. Many traders struggle using support and resistance because the price often reacts quickly at those levels without providing easy entry points, right? Best two options are in the scenario add half size a little bit later, a little bit higher, or just be satisfied with half a size. Cut the area where your average should have been when it goes up and down. That's part of parabolic, how to get out, okay? Again, I spoke about the degree of difficulty. This is not done, guys. This is not done. This is not a trade right there, okay? That's always going to make you lose unless you went long. Unless you went long, this is always going to make you lose. So loss here, loss there. All right? You see this red arrow? Loss here, loss there. Now, you're taking a loss, right? What is this? $3.20 to $5. My goodness, that's a lot of losses. Okay? That's where I get really upset. That how did I let it happen to me? And then I come back, and when this comes, and it makes a square, okay? It drops from here. First thing you do is go along here. Then after that, turn into a short, and make whatever recovery, possible recovery, guys. So again, you're stuck in a parabolic. You've got to take a stop loss the minute it drops. I know you guys think I'm going to get out of it. Oh, this is going to drop beyond my imagination. Well, that's why you're asking that question, because you're thinking that it's going to drop beyond my imagination, and it doesn't. It happens more often on a short. If you're long, you're fine. You know, it's going to go only zero. You're short a $2 stock and it goes to $10. You just lost like gazillions. So short is not an easy skill. Shorts make you the most money, makes you the most entry. It's not an easy job. The easiest thing you can do yourself is take a stop loss. Hit the stop loss button, comes near your area, get the F out, okay? Get the fish out, whatever, okay? And after that, say I'm gonna come back, I'm gonna relax, there's a couple other plays. And there's gonna be some bad days, but don't cry about it. Next day, come back, you know, if it doesn't happen. When was the last red day we had? I came very close to having a red day 2 days ago. I was 4,500 in red. Since August, I haven't had a red day, but I didn't have a red day. And today I walked away with 24K, 23.5K. So again, guys, when it's running against you, play the range, look for the higher areas, get out where you can. This is not going too far. This is 320. You're adding it, you're coming back, and you're cutting it, okay? So that's all it comes down to. Now, last thing I'm going to talk about it, which can be done only live, and we are not in a trade, right? Hold on 1 second. Again, these are today's trades, guys. Look at this. You cannot go, I have like some small position this. You cannot deal with this. You cannot deal with this. If I was trading, I would have taken right here. I have like something like 100 shares or whatever. Or not even 100, 10 shares. PBM, again, we took our stop loss. This was the easy one. Xena came in. PRFX, again, we took a stop loss, went long, right? So coming to it, if you don't take a stop loss, and if you don't recognize what level 2 is telling you where this halt is. So somebody asked me a question about how to recognize a halt. Level 2 tells you where the halts are for almost every stock that you're trading in the market time. Why do I prefer 8 o'clock and only after 8 o'clock in pre-market? And don't really care for post-market unless I'm sitting and I know some good stuff and I've been trading for long enough to know where I can trade. Most of you guys who just started trading, I will tell you, avoid pre-market, avoid post-market. It's not the place to trade because there's no control, there's manipulations galore. You're going to win a couple, you're going to lose 3 or 4 so big that you wouldn't even know what hit you. So last thing, When you're looking at the halt level, on level 2, it will tell you. So you have an entry, and I've said this live in our room. Suppose you have an entry at 240, our favorite number. Stock is coming from 110. Massive 80% move, right? It's a short. But the halt is 242. Do you go in at 242? Again, recognize the volume candle, what those volume candles are. Is it the 200K or is it the million or is it the 3 million? 3 million will let you do it. Okay? Because those guys take 3 to 5 cents in a profit. Anything near 300K to a million point two will be 30 cents mover. So that means if you're stuck in a halt, they're going to open higher on a halt. Again, repeat. Your entry is 240, halt is 242. Wait for the halt to move near 278. You might as well take 250. You might as well miss a trade at 242. But don't go in a halt at 240. Now, if it's a rejection area and you know the stock hasn't done anything serious, once in a while you're going to get stuck in a halt and you're fine. You go in 240, it goes against you, they're going to open at 320. Get out, lose, take walk away. Okay? But first thing first, don't get into a halt which is near your entry point. That's the first thing. Now, if it's a slow grinder, a halt is 20 cents away, 30 cents away, take it. That's a level, guys. That's a range. That's not parabolic. It's the parabolic halt you want to avoid. The grindy one in the range, and then little parabolic. So we don't enter in a grind, right? We know this. We want 10 cents, 15 cents move. Is that a true parabolic of gazillion dollars? No. Is that going to kill you in a halt? No. Is it going to hurt you once in a while? Yes. Most of the time, it's not going to hurt you. So, but if it's a 40 cents a squeeze, it's only like a long candle like the one that happened this morning, NVI, whatever that ticker was. It's all buy, halt. And you want to get into a 240? You are silly. You are really silly. Let it happen, at least let it happen up and down in a range. I know that stock was from 40 cents. And I was looking forward to getting in at 265, 268. But when I saw that candle, only buy candles, I didn't even take a chance, even at 4. It went to 4, by the way. So anyway, that's it, guys. That's all for today. Do you guys have any questions? My members, obviously, you guys are listening. You can type in the room. I am done. Hopefully you enjoyed it. Like our channel, subscribe it. Next time when we have a webinar, we can offer you more insight and a lot of teaching that you're not going to get in the regular places. Twitter, thank you so much. I think that's the only 2 places we're live, Twitter and YouTube. Hopefully you enjoyed it, presentation. Do leave a comment. And you want to look up trading with us in the morning. We are doing it between somewhere around a little bit after 8 to 9:10 on the YouTube and Twitter live with the video feed. And then after that, rest of the day, we're in the Discord room. You can join for free for a 5 days trial, which is 4 days basically, I think. That's it. See you guys later. Bye.